So if you're wanting to become a real estate millionaire over the next 12 months, this video will absolutely change your life. Now, let's say that you have a goal, and maybe for some of you it's as low as $5,000, and for some of you it's as high as $30,000 a month in monthly passive income. Well, in order for us to reach that goal, all of us, regardless of what our goal is, have to have good, solid deals that we do. And of course, in order for us to do those good, solid deals, we have to have the fundamentals like the right knowledge, the right steps, the right strategy. But oftentimes what's equally as important, and arguably maybe even more important, it's understanding the market that we're doing the deals in. It's not like preparing for war and not knowing what the battlefield is like. It's gonna be to your disadvantage. So what I wanna do with you guys in this video is cover what I believe is going on in the market and why I believe we're about to enter into one of the greatest opportunities in the real estate investment space. Now, if we're gonna understand any market, we have to start with the most fundamental rule of all, and that is the law of supply and demand. Now, specifically to real estate, on the supply side, we have current inventory, which is the amount of listings and deals and assets available to us right now. But then we also have future inventory, which is how many units are being developed, whether it's a duplex, whether it's a fourplex, 5, 12, 200, what's actually being built right now. And last but not least, we have levels of distress. So those individuals that currently own those buildings and may be interested in selling, what is the level of distress and how motivated are they? Now, on the demand side, we have number one, cost of debt, which is the interest rate, which obviously if we're buying a piece of real estate, whether it's an 8 unit, whether it's a 20 unit or a 200 unit, 99% of the time, we're going to leverage that acquisition with financing. And well, what is the cost of that financing? That matters a lot. And not only that, but what is the available undeployed capital? As in how much money is sitting on the sidelines that's available, whether it's through somebody raising capital or somebody buying it themselves, that's available to go after these assets. And last but not least, we have market interest and strength, which is, hey, how many people actually care about real estate and is interested in investing in it versus something like crypto or stocks, bonds, mutual funds, or any other investment asset. But if we're talking about what's happening right now, let's go ahead and start with demand. Now, from a high level standpoint, this is how the real estate market works. And I'll be very brief because I understand most of you already know this. But number one, the Federal Reserve sets an interest rate. Number two, the Fed lends money to the banking system. And then the banking system then lends that money to us with a higher premium. And we go ahead and take that money and do stuff like purchase rental properties. See, nice and easy. But if you look at roughly over the last 2 years and what started in March of 2022, interest rates have been skyrocketing. And in fact, they've been going up at a higher rate of acceleration than any other time in history. Now, some may ask, well, Daniel, why does that matter? Especially when it comes to specifically investing in real estate. Well, it's actually one of the most important things because, well, the higher the interest rate goes, the lower the prices eventually go as well. And that's because the higher the interest, the less people are able to participate in the market and make offers on investment opportunities. So if we're talking about supply and demand, number one, rates have increased at a faster rate of acceleration than any other time in history in just the last 2 years. But now if we're looking at the supply side, there are actually more housing units being built than ever before in the history of our country as well. In fact, take a look at this chart right here. This shows the total amount of housing units under construction in our entire country. And this chart is directly from the Federal Reserve. Now, if we look at May of 2024, which is the most recent data, it actually shows 1,593,000 total housing units under construction. But here's the thing, if we look at the last few years, it actually shows that between 2022 and 2024, it's the highest amount of housing units under construction ever in the history of the United States. In fact, the last time it was even this close was Q1 of 1973. And as you guys can see, there was one of the worst recessions we've seen in the real estate market that occurred shortly after. But all that said, here's where things get really interesting. Because if we look at this chart right here, this shows the total amount of apartment units under construction, specifically catering to those of you guys that are wanting to invest in real estate and are buying for cash flow. Now, if we look at where we've been over the last 2 years, it's also been a record, showing in May of 2024, which is again the most recent data, 898,000 total apartment units being developed. And again, last time it was close, Q2 of 1973. But here's where I may disagree with a lot of other YouTubers out there, which is that I don't believe a housing market crash is underway. Because if we look at the total number of houses being built currently, just single-family homes, it's not really noteworthy historically. In fact, the most recent data, May 2024, shows us only 678,000 houses being built. And if you look at the entire chart as a whole, you see that it's actually kind of close to the average. And this is happening all the while we have so many qualified buyers sitting on the sidelines that have been priced out of the single-family house market. So to summarize the last few charts that we've seen, number one, I don't believe that there's going to be a crash in the housing market anytime soon, because even on an average market, it's actually normal for us to see between 1.1 to 1.3 million houses listed in the market. So like on Zillow or the MLS or on Redfin. But right now, we're actually at 700,000. So we're still severely under inventory in the housing market. But on the apartment building side, on the real estate investing side of things, well, there's going to be massive amounts of opportunity there because there's no shortage of inventory on that side for investors. So far we talked about how rates have gone up at a faster rate at any other time in history. We also talked about the massive amount of future inventory that's coming. But here's the factor that is arguably the most important thing when we're talking about the real estate market over the next 12 months, which is the record amount of balloons that are coming due in the real estate investing market. Now, a brief and simple definition of balloon payment is a large lump sum payment or a refinancing after a certain amount of time and that loan term is completed. Now, in regards to what actually happened with balloon payments and why I believe a tremendous opportunity is here is because, well, you see, 2-3 years ago, we saw the lowest interest rates that we've seen in recent history. There was like 2.4% for single family houses, and commercial rates were as low as 3.5%. And well, of course, banks didn't like that because it meant they made less money. So they started pushing products with a lot of short terms on them, like balloons or bridge loans or just any form of short-term loans in which you had to refinance 2, 3, 4 years later. And of course, banks did this because they didn't want the low interest rate over a 5, 10, 15-year period, and they could just renegotiate that loan in 2, 3, 4, 5 years. And well, investors took them because they saw rents skyrocketing across the country. In fact, between 2021 and 2022, rents as a nation went up 15.6%. And for that reason, a lot of investors overpaid for their buildings with these short-term loans because they thought the income was going to continue to rise and rise and rise. Very similar to when people bought homes in 2006 and 2007 because they just thought the value of their home was going to continue to go up, up, and up. But now, of course, it's 2024, and all those investors that bought their properties in 2020, 2021, 2022 with 2, 3, 4-year balloons are now up. They're coming due, and now they're at a point where they have to renegotiate. And well, we all know the higher the interest rate, the lower the price. And what happened over the last 2 years? Well, interest rates went up 5%. In fact, let's actually play this scenario out. Let's say investor A bought a 10-unit apartment building, and let's say he bought it in 2021. Now, if we're doing basic real estate investing math, let's say he collects $1,000 per unit, and this leaves us with $120,000 in annual gross income. Because there's 10 units, $1,000, that's $10,000 a month, and 10,000 times 12 months is $120,000 in annual gross income. And let's assume that half of it goes to expenses, which is right on point with what the national average for real estate investing expense ratios are. And that leaves us with $60,000 in net income. And again, that's after all operational expenses like taxes, maintenance, insurance, utilities, etc., etc. Now, let's say that our goal with this investment is to have about $25,000 in cash flow every single year. So if we're talking about this 10-unit building, let's just call it 123 Main Street, bought in, again, 2021. Let's say the price was $800,000. The down payment was 25%. The interest rate was 4% over a 30-year amortization. This gives us a yearly mortgage of $34,373.88, which gives us a yearly cash flow of $25,626.12. So congratulations, we met our cash flow goal. But now it's 3 years later, 2024, and the new average commercial rate across the country is 7.5%. So if we refinance this loan and we take the interest rate from 4% to 7.5%, our yearly mortgage cost goes from $34,373.88 to now $50,343.48. And unfortunately, just like that, about $16,000 worth of cash flow is gone overnight. Now, here's where the situation gets even scarier, because let's say investor A, the guy who bought this 10-unit building, brought on another outside investor and actually raised the capital to do this deal. So if we look at 123 Main Street, bought in 2021, with all the numbers below and the numbers from before, and let's say that the amount needed to raise for this deal was $250,000, which is $200,000 for the down payment, and let's just say $50,000 for closing costs, fees, and reserves. And let's say that the investor who brought the money for this deal got a 70% split on this transaction. And so this individual invested $250,000 of their money. The yearly cash flow is $25,626.12. And based on the 70-30 split, the investor would receive $17,938.28, which means the cash on cash for the investor is 7.17%. Now, is that good? Is that bad? Well, it depends on what the investor is typically getting, but this is typically middle of the road cash on cash return. But now let's look at the scenario of 3 years later when the investor had to refinance this 10-unit building and renegotiate like the bank had structured. So now with the rate of 7.5% and the yearly mortgage being $50,343.48, our yearly cash flow went from $25,626.12 to now $9,656.52. And now if we look at the same return for the investor, the new yearly cash flow gets split again 70-30, and now the investor only gets $6,759.56, taking his cash on cash return from 7.17% to now an unfortunate 2.7%, which is less than the current inflation rate. Hey guys, not to interrupt, but if you guys really enjoy this content, please like this video, share it, but also comment down below what are some great takeaways that you got, because it not only helps us with feedback, but it actually helps the algorithm and also allows other people to see this stuff as well. So to summarize this video, if we're talking about supply of rental properties, on one side, we have record amount of new construction coming in, and on the other side, we have sellers already being forced to sell because of the renegotiating that banks are doing with their interest rate because of the short-term debt like bridge loans and balloons. And all the while this is happening, demand is getting smaller day by day because of the interest rate. So what happens because of this? Well, prices don't fall, they absolutely plummet. Now, all that being said, if you're looking to become a real estate millionaire over the next 12 months, there's actually even better news, which is that there has never been a time to raise capital for real estate investment deals. And there's a few strong points to support this. So number one, which is that there has never been a time where people have been more interested in investing in real estate as there is now. And there are a lot of different reasons for that. Number one, real estate is a great way to hedge inflation, which a lot of investors are concerned over right now. Number two, there's record high wealth creation, which means people have the liquidity to actually invest in real estate. And number three, there's a strong mass belief that there's high volatility in the stock market, which is why a lot of people are running to assets like crypto and commodities as a whole that tend to do a better job at navigating through volatility. But also, if we were to look at this chart right here, this shows the latest numbers from the Federal Reserve showing how liquid investors currently are. In fact, this is the total money market funds and total financial assets available. And as you can see in Q1 of 2024, which is the most latest and recent data, there's currently over $6.4 trillion worth of liquidity for us as real estate investors to raise capital from. And if we're talking even retirement accounts, that's a different story, because that number goes well above 10, 15, 20 trillion dollars available. So not only are there a massive amount of opportunities happening around the corner in the real estate investment space because of the law of supply and demand, but there's also record amount of capital to be raised so that we can actually work with these folks and go after these opportunities as well. Now, that being said, if you guys want to know how I became a real estate millionaire by age 23, go ahead and click on this video where I show the exact step-by-step.